So now we go back up here. We were paying 153 and 121, right? So this was 153. This was 121. But now we have freed up $478.30. So this is really nice. So now, before we apply that money, we also have to understand that after 42 months of the student loan, that here's our balance, but the interest paid to date is a pretty sizable $58.29.79. So here's our first measure of this exercise, is the two interest calculations. So now we need to go and get the furniture and the credit card itself paid off. So the card that's charging the most interest needs to get paid first, and that's what we figured out from the past. Okay, so that actually is the credit card. So the $121.70 was the minimum payment. So then the $478.30 that was freed up from the student loan was added to that, and it created a monthly payment of $600. So from running the numbers that you don't see here, so you don't have to see the long schedule, it would be paid off in 50 months. And then you can see that the total interest would be $3147.83. So that includes everything, not just the numbers we saw above, for the entire duration of the loan. Okay, so then the same principles we've been doing with the credit cards and the additional payments exercise is this money now gets freed up, this $600, because the loan's paid off. And then at that point, in the 50th month, the furniture has a balance of $985.75. So 1 month with $600 already, it's going to knock that out, because again there was a partial payment. So what we're saying here is that we had $985.75, and the 1 month $679 was a result of the normal payment and what was left over from the $600, because the entire amount of the $600 was not used in the last month of the credit card up here. But because of $679 less $985.73, it leaves $321.73. So in the last month, in this 51st month, it'll be paid off with some change left over. And then here the interest came out to almost the same as the other card, $3147.06. Okay, so these are totals, right? So what we find out that is that the student loan we already knew was $2,066.97 for the 42 months. Let's abbreviate here. And then these two figures right here were added together because it was the total month. So we just stopped at 42 for a measure upstairs there in a couple pages. But really what we're saying here, this is the total interest for the entire 51 months between both cards that get paid off. And so if we add that up, now you can see that we get $8361.86. And then we compare that to the exercise we did a few pages up, and we can see that that is $5,960.08. And it is clear that it's proving out that what we want to do is pay off the cards or the loans that are accumulating the most interest. There's just no other way to go about it in terms of simple math, simple way of saying to put more money in your pocket and not someone else's, which is our motto. So if this were to happen to you, and I'm sure some of you are into this situation, you have to go perform the numbers yourself. Usually that credit card is what you want to pay off first, because again, it's revolving debt. It'll just keep adding up. The amortized schedule tells you how much interest you're going to pay, so you can understand the difference in doing the math by using an amortization calculator or a credit card calculator, and it'll tell you how much it'll take you to pay off for both of those, and you can do comparisons just like we did in here. So we can certainly we'll create some more videos to show you how it works online to look at it, but all the information's in these sections as you've seen here, and if you just take a little time and run it, you pretty much not too much time taken out of your day to determine really how much interest you would pay on either end. We're proving out more and more again, just so it burns in your brain. You want to pay off again the highest interest accumulating card, and it's usually the credit card first because of the revolving debt. Okay, ladies and gentlemen, that is going to wrap up Chapter 9 Consumer Loans, and that means Chapter 10 is coming up next, and that is the last chapter. This is the progression of Jasper from the beginning all the way to the end with the built-out budget, expenses, and a future plan for him getting a raise and really starting to see the fruits of his efforts and discipline in his budgeting. So we will see you there, and we thank you for joining.